let's talk about Vechain, a project that's been around for years with real partnerships, real-world use cases, and a community that's been holding on through thick and thin. But the big question now is this: what could actually affect Vechain's price in the future? Because while many people have forgotten about VT since its all-time high of 21 cents back in 2021, there are still a lot of moving parts that could change its story completely. Right now, Vechain trades at just a few cents, a long way from where it once was. But that doesn't mean it's done. The crypto market has changed a lot since 2021, and Vechain has been evolving quietly in the background. It's no longer chasing hype. It's focused on utility, adoption, and building real value. Still, the factors that could drive its price or hold it back are worth understanding if you're serious about the long-term potential. One of the biggest influences on Vechain's future price is the Stargate staking program, which launched on July 1st. This isn't your typical earn rewards setup. It's designed to reduce the circulating supply of VET by allowing holders to lock up their tokens in exchange for yield. Analysts like Crypto Michigan NL and Michael Van de Poppy have said this could change everything for Vechain's tokenomics because it directly reduces inflation and rewards long-term holders. This is crucial because one of Vechain's biggest weaknesses in the past was that there wasn't much incentive for people to hold onto their coins. With Stargate, that dynamic is shifting. The more people stake, the fewer tokens are in circulation, and that can create upward pressure on price over time. The stronger the staking participation, the healthier Vechain's ecosystem becomes. So what could affect Vechain's price in the future? It comes down to 5 main forces: staking adoption, resistance breakouts, enterprise adoption, market sentiment, and broader crypto trends. All of these are interconnected, and if Vechain manages to execute on even half of its current roadmap while maintaining strong staking participation, its price could look very different in the next bull market. The truth is, Vechain doesn't need hype to succeed. It needs patience. The team is building something real, and the fundamentals are quietly improving. The next time crypto investors start looking for projects with real-world use cases and sustainable ecosystems, don't be surprised if Vechain makes a comeback. Because the story of Vechain isn't over, it's still unfolding. The groundwork for its future price movement is being built right now. And when the market finally wakes up to that, it might already be too late to catch it cheap. Vechain isn't just another token. It's a full-fledged platform designed for real-world applications, especially in supply chain management. Recently, BitSE News dropped an ultimate guide on Vechain, $VET, and it's packed with insights. Let's break it down in simple terms so even if you're new to crypto, you can grasp why this project is a big deal. Vechain kicked off in 2015, founded by Sunny Liu, who used to be the CIO at Louis Vuitton China. His background in luxury goods gave him a front-row seat to supply chain headaches, like counterfeiting and lack of transparency. So he built Vechain to fix that using blockchain. Fast forward to 2025, and Vechain has grown into a powerhouse for enterprise blockchain, focusing on real-world assets rather than just hype-driven trading. At its core, Vechain Thor, the platform's blockchain, combines blockchain with Internet of Things, IoT tech. Imagine slapping a smart chip or QR code on a product. This creates a digital passport that tracks everything from manufacturing to your hands, all immutable and tamper-proof. It's compliant with big regulations like those from the European Securities and Markets Authority, ESMA, making it enterprise-ready without sacrificing privacy. Now let's talk tokens. Vechain has 2, VT and VTHO. VET is the main utility token used for transferring value and staking. There's a fixed supply of about 86.7 billion VT, which means no endless minting like some other cryptos. It's super precise with 18 decimal places, perfect for everything from tiny IoT payments to big business deals. VTHO is the gas that powers transactions. Holding VT automatically generates VTHO at a rate of 0.000432 per VT daily. No staking hassle required. For instance, if you hold 10,000 VT, you get 4.32 VTHO every day. Transactions burn 70% of the VTHO fees, which helps keep the system deflationary and rewards network maintainers with the rest. This setup keeps costs predictable, even when the market gets wild, which is a huge plus for businesses. One of the exciting parts of the guide is the 2025 upgrades. The Galactica protocol, launched on July 1, 2025, brings Ethereum compatibility through Shanghai EVM integration, making it easier for devs to build on Vechain. It also burns 100% of base fees for VTHO, ramps up scalability to potentially 10,000 transactions per second, TPS, and introduces type transactions for smoother operations. Then there's Stargate, a new staking platform that went live the same day. It offers $15 million in VTHO rewards over 6 months and uses NFTs for staking positions. Staking limits jumped from 25 million to 600 million VET, with tiers like Dawn Node, starting at 10,000 VET, up to Mjolnir Node, 15 million VET, giving multipliers from 1x to 5x. This makes staking more accessible and boosts network security.